So I guess over the last years in this conference, we have been anticipating and describing the views on digital transformation, somehow anticipating the level of disruption that this could have on many industries. One theme was common in those conversations on which would be the industry that could be most affected or transformed. And I think it was a very common view that financial services and payments was going to be one of those. I think the news, and overall I would say our good news is that disruption, it's already here, it's happening. And therefore we felt that really going and doing this double click in this industry, and also in Latin America, that in many dimensions might be also leading the way on that reshaping and transformation, was a good topic for this discussion this morning. So we are so happy to have this amazing panel formed by individuals that are leading and shaping that transformation from different perspectives, and in a sense providing a very holistic and systemic view on the industry in our region. So on one hand, the idea of those that are disrupting and attacking the traditional model, what we have been wired for many years, and Cristina Junqueira from Nubank, and we'll talk about their own stories. Then Osvaldo Gimenez from MercadoPago, that is one of the key elements of Mercado Libre, a true shaper of our e-commerce, commerce, and marketplaces that is going into new segments on the industry. Then Kiki del Valle from one of these traditional facilitators and stocks in this industry, like where the traditional payment association and now is such a distinctive player on the industry. And Fernando Iraola, I think a distinctive representation of what traditional banks and incumbents have been doing and are doing and adapting successfully to this industry. So thank you everybody for joining us, the panelists and you all. I think the idea might be to start with Cristina. I think there are many stories already on Nubank, a lot of recognition, accolades, but if you would need to summarize and to share with all of us, what was that driving idea and driving force that really triggered you and your co-founders to start this idea in a fairly established industry? And maybe briefly, the second one would be, what has been that key challenge in this 6-7 years of your own journey, so that to open the discussion and get the perspective from the others?
Sure. Well, thank you for having me. Good morning, everyone. It's a pleasure to be here. Listen, just recapping a little bit on the bank's history. So we started out outraged, just, coming from this place in which we just couldn't take it anymore as consumers, especially in Brazil, where people just got used to it and found that it was normal for us to pay some of the highest fees in the world, some of the highest interest rates in the world, have one of the worst customer experiences in the world. Like, what the hell? And at some point, like when we started talking about that, and we started talking to investors and to some of the people that knew us, that were thinking about starting a company in that space, people would just look at us and say, "You're crazy," because this was roughly 7 years ago, 6.5 years ago, and the term fintech didn't exist,
yep,
or the term unicorn, or any of the boom that we've seen recently in the last years. And this was just like one of those sacred cows, People would say, no, that sector cannot be touched, right? And at the same time, what we could, impossible for us was not to do anything. It was just to continue to take that. So that was a little bit of the starting place, and of course, like a lot of the drive that pushed us forward as we face so many challenges. So you've asked about the challenges. Listen, everything is hard about building what we've been building, right? So technology is extremely complex, and we've built our own technology from scratch. Now we're relying very few, if any, partners. Raising capital, it's a capital-intensive business. We've raised over $800 million to date in capital. Regulation is extremely complex in Brazil, everywhere, I guess, but in Brazil especially so. Of course, competition was extremely powerful, and there was a lot of inertia in the market. We didn't know how consumers were going to react to something so new and so different. So everything was hard, of course, you know. But I think the main challenge has always been and continues to be just people, you know. Of course, in the beginning it was even harder because try to hire some of the best people that you found when you have no money, no office, no brand, no products, you know. So I guess we're better positioned these days, but it continues to be hard because we've crossed the mark of over 2,000 employees already in Brazil, and we now have offices in 5 countries, last time I counted, and we've had to search everywhere for talent. So it continues to be the biggest bottleneck for us, you know, especially on the technical side for sure, but frankly everywhere. And we've had to look just, you know, globally everywhere. We've quickly exhausted the amount of, you know, technical people, software engineers in Brazil that knew our stack and were good software engineers. Very quickly we moved on to, you know, having great software engineers that didn't really know our stack, so we had to train them. And we might be running out of those too. So we recently announced that we're expanding to Argentina and hoping for that to be a big tech hub for us. There's a lot of talent there, really across the region. We now have operations in Mexico. We've opened an office in Berlin to tap into a different talent pool as well, like technical talent pool in Europe. So it continues to be the main challenge.
Thank you, thank you. Osvaldo, maybe on the other side of the river and with the story starting also in Buenos Aires many years ago and you being one of those co-founders, how the mindset of starting as a marketplace and realizing that you need to somehow provide some enabling services, solutions, or platforms to really make the whole story work, and with a very initial intent of being true, a very regional, how that has evolved, that created this centerpiece of MercadoPago, and how far it could go from the distribution to the lending to the investment side. Yeah.
Absolutely. Thank you for having me, and thank you for the question, Jorge. So when we started Mercado Libre, what the opportunity we saw was to provide access, to democratize commerce, basically. What we saw was consumers, mostly who were away from the larger cities, did not have access to the same products and the same prices as consumers in the large capitals. And on the other hand, for merchants, when they wanted to sell stuff, they didn't have a level playing field because they did not have national or regional distribution. And so the first thing we did was create that platform, and it was strictly a marketplace, but soon enough we realized there were 2 huge opportunities that we would have to address. One was logistics and the other one was payments. And therefore, a few years after, we launched MercadoPago. This was 5 years into the life of the company, 15 years ago. We launched MercadoPago initially to make it easier for merchants to collect using credit cards and using different means of payments all over the region. But as we started doing that, we realized that the same opportunity was also available away from Mercado Libre, for online transactions away from Mercado Libre, and we started our online payments business. Then we were lucky, or everybody here was lucky, and Jeff Bezos, and Steve Jobs invented the iPhone, and then Android came along. And so the main mean of connection to the web stopped being the computer and became the phone. And if you want, for some businesses, that was just a change of platform. For Mercado Libre, it was mostly a change of platform. For MercadoPago, this was a huge new opportunity opening up, because even though e-commerce is growing a lot in Latin America, it's only 5% of retail. And with iPhones and with Android, using MPOSs and QR codes, you were able to tap into payments for that offline transactions. And this is a significantly larger market, and it's a market where we believe there is a huge opportunity, because over 50% of transactions in Latin America today, retail transactions, are settled in cash. So it doesn't make any sense that we continue exchanging pieces of paper in 2019, and so we saw a huge opportunity to grow into MPOS, into QR code payments and wallet and so on. And then moving into the last part of your questions, going beyond payments, what we saw, and we said we started with democratizing commerce, and we're talking now about democratizing access to financial services, is that many of huge chunk of Latin America, close to 50% of the population in Latin America is either underbanked or unbanked, basically. And so we started with credit. We started offering credit to our own merchants. Again, there was a lot of talk today about being customer-centric, and there was a need by our merchants to be able to get working capital for special events and so on. So we started lending our own capital up to 2 months of sales for them to be able to handle peaks. And then started doing the same with consumers who wanted to buy something on Mercado Libre or using the MercadoPago platform. And then the last thing we did beyond credit was getting into some very, very basic asset management. What we do is basically having a money market fund. We started with Argentina, and it's already launched in Brazil too. So we have millions of consumers in the region who, whatever balance they have in their account, instead of having no interest on that, they're gaining something pretty close to the risk-free rate in Brazil and whatever is the risk-free rate in Argentina, which today is roughly 50%. So it's a proposition that is significantly better than storing their balance in their savings account.
Thank you. And Kiki, the traditional mindset of a member association of many years back from Mastercard and moving into a new both ownership and governance situation for Mastercard really allow you to really be very effective, like a glue or a facilitator, and supporting not only banks but really other players. And you are responsible for many of these digital partnerships. And in fact, I believe you are partnering both with Mercado Libre, Nubank, and many others. How would you describe the role and the aspiration for Mastercard today to really facilitate, empower, and even accelerate those initiatives and those developments?
Sure. I think there's no more traditional mindset when it comes to the way that we operate. At our core, Mastercard is a technology company that is safeguarding billions of data points that need to be routed via our network. Our traditional business model, which has been a four-party model, working with banks predominantly, has evolved. We have been expanding to actually work with new players such as MercadoPago, or even challenger banks as Nubank, to try to figure out exactly how to bring new solutions, new products, new services to market. A lot of that has had to do with the fact that we have seen over the last 5 years how digital connectivity, how mobile money, how the rise of big data and digital banking services have actually helped us reach the unbanked, the underserved that Osvaldo was actually referencing, right? I mean, today, close to 50% of the population in Latin America is underserved. But in the last couple of years, we have been working across the globe to try to get inclusion for those folks that today cannot benefit from traditional financial services. And that has been done a lot of times in partnership with non-traditional players. The way that we have evolved our franchise, which for those of you that are not related or that don't know as much on financial services, Mastercard operates within a franchise network, meaning that there's rules and standards that everybody within the ecosystem must actually abide, so that there's an equal level playing field for all. And we have been evolving that to the point that we've not only launched products and services, new solutions, APIs for everybody to be able to integrate, but we have actually evolved the franchise, our rules, to ensure that we can accommodate for these digital changes. An example of that I can mention is what we call a digital first program, which we launched with when we launched the Apple Card, we ourselves launched a digital first program. What that means is that banks, issuers, are now able to issue virtual accounts, which consumers will be able to apply, get approval, get a virtual account in a matter of minutes, and therefore be able to manage that all via a digital device. You shouldn't have to wait 5 to 7 days to get a card on the mail. You should be able to get the same benefits in the digital ecosystem because we actually already have the technology to enable that consumer experience to take place. So a lot of that consumer experience is facilitated via our technology. So working in partnership with issuers, working in partnership with digital partners, we're able to deliver those type of experiences to consumers that at the end of the day are challenging the mindset, the consumer mindset, that I only need to operate with my plastic card. I can now actually operate with everything within a mobile application.
That's great. Thank you. Fernando, obviously, many would look at large, traditional, successful banks as an incumbents, and all of us, I think, have experienced how hard change is. But at the same time, I guess everyone would acknowledge the value of having those assets, like our global footprint, millions and zillions of customers. So how, maybe comparing with some of the other organizations that really were born more with that ecosystem and systemic view, you feel and that believe that Bank of America is really changing rapidly in terms of thinking more with that ecosystem perspective, doing innovation not only for itself, but also for their customers. How that process is happening within the bank.
Sure, thank you, and good morning, everybody. If our CEO, Brian Moynihan, would be sitting here, he would start by saying that our purpose is to make the financial lives of our clients around the world better, simpler. And certainly from a transaction banking perspective, which is the area in which we operate, is we see ourselves as enablers of financial and commercial flows around the world. I'll give you a number. We process 1.3 trillion with a T, dollars of payments every day around the world. There's very few financial institutions or companies around the world that have that massive scale and reach. Yep. We can today reach 100 plus local ACHs around the world. So what we see here is a phenomenal opportunity to continue to add rails and our ability to enable those flows for our clients from the perspective of making sure that they are delivering the better customer experience possible. We heard in the previous panel, Erica talking about the friction that they have had in terms of enabling their clients to pay them. We want to take that friction away. So the emergence of more payment types presents an opportunity for us to enable that. So think about, the way we think about it is to the same way that you purchase a good in Mercado Libre and you want to deliver to your home in XYZ amount of time at a given cost. We want to be able to deliver payments regardless of the payment type anywhere in the world and at the best possible pricing point depending on the urgency, relevance, and settlement date of that transaction. So we will continue to invest in infrastructure to be able to cater to every single payment type that is emerging, particularly in the emerging markets, because that is most of the innovation is coming from. Let's put Silicon Valley aside for a second. However, we still deal with checks in the US, which is something fascinating to me, but that is how we are thinking about this opportunity and how we continue to invest in it. The other observation I would make as an incumbent, to your point, our investment in technology, our technology budget item is $11 billion every year. Out of that number, $3 billion every year is invested in what's new. So again, the fintech space, what is happening for us is a unique opportunity because we are partnering up with fintechs to be able to facilitate commerce around the world. That's great, thank you.
Osvaldo, we have been somehow focusing on Latin America, but the globe is broader. And with the evolution and the roadmap on how Mercado Libre has been evolving on all this addition of layers of value and services, there is the whole discussion on how potentially a super app could be born in South America. And somehow despite the focus on the marketplace and the payments and how far it could go, and do you think that these super apps could really emerge successfully in Latin America as the case of WeChat and some others in Asia, or there is something specific differently in Latin America?
As you mentioned, it has, so far in the world, it has evolved in a different fashion in Asia and in the West, if you want, in Asia. You have seen a couple of super apps grow in each market. That has not happened in general in the US or Europe. What we are seeing and where we are very excited about is adding more use cases to our wallet. It's mostly, so far has been mostly transactional cases related to payments, but we started with the ability to top up mobile phones and then pay utility bills and then top up, I don't know, prepaid TV or public transportation and then QR codes. And what we see is the more use cases you have and the more use cases a given users use, then his retention is higher and he's happier with the app. So what we see is there are plenty of opportunity to continue adding those use cases if it will turn out at the end of the day to end closer to what happened in Asia with people doing all kinds of stuff within one app or not, still remains to be seen, but we believe there's still plenty of opportunity to significantly increase the number of use cases.
Yeah, thank you. Kiki, when we get excited about all these new use cases and new applications and functionalities for consumers, at the same time we get a bit scared on our privacy and our cybersecurity. And so therefore this is a potential weak link for all these developments. How are you seeing and supporting players on that field, given the systemic impact that this could have?
Yeah, security is foundational to everything that we do at Mastercard. So since 2003, and we have a number of challenges in the digital commerce space when you think about it. Since 2003, we have actually faced over 9 billion compromised accounts across the world. Many of this actually coming from very high-profile breaches at big merchants. Combine that to the fact that most of the consumers today are hesitant to load their cards on a given retailer because they may be vulnerable to fraud. So how do you actually overcome that? When part of that comes from technology and what we need to do to actually bring the learnings and insights that we have actually learned in the offline world, in the brick and mortar world, to the digital environment. So offline, we have been able to operate with chip and dynamic data embedded in those chips. All of you actually have that in your physical cards. We also combine with authentication, the ability for the consumer to actually embed a PIN or input their PIN at the point of sale. How do you bring that into the digital environment? What we've actually done is we've actually deployed new solutions like tokenization that are actually being rolled out across the world right now. And what tokenization is the idea that I can actually replace an account number that I as a consumer have actually stored on a merchant or a wallet or a device with a proxy number, with a token. And the importance is that the data that token actually contains is data that is dynamic. It's data that is encrypted, and from the end to end, from point A to point B, which is what we actually manage in the flow, we can actually decrypt that information on a dynamic basis. The other thing is that, which is very beneficial to the consumer, is that a token never expires. We at Mastercard contain a directory. We have the ability to map every single token to every single account number that the issuers have. And what we can do is that if an account, for example, is lost or stolen or needs to be replaced, a card needs to be replaced, the consumer doesn't, and the consumer receives a new card, that same consumer doesn't now have to go back to every single merchant to update their information. That's key. Oh, wow. So the ability for us to combine good security, because that token is also different for every place that consumer is leaving their credentials, to also combine that with a good customer experience is what we're actually focused on. So it's creating the right balance between convenience and security.
That's great. Cristina, when you mentioned the long list of challenges and hurdles in this process of growth and development, you ended on the talent dimension. And you mentioned about the strategy of creating some hubs for sourcing talent. But we know that you are very committed to the role of women in technology. And I guess Nubank has been somehow distinctive in creating both the environment and the conditions and the practices and the experimentation on how to ensure that you're getting the right, let's say, balance and representation in an industry that really has been suffering from very low representation. So any learnings, any suggestion and ask to the industry on what you have been doing and probably should be broader with other institutions, yeah.
Listen, this is something that we're extremely proud of. Like when we list our 5 company values, one of them is actually we grow strong and diverse teams, because the unity of work at Nubank is a team, is not an individual. And we've always seen this diversity as a core function of, you know, how differently we think about things. And I think this translates to the original founding team. So myself being there, I think meant a lot and has influenced a lot, like the path that we've taken so far, which has led us to now have 43% of women at Nubank. Like we're very close to parity. Again, at the intersection of 2 industries that are known to be horrible, you know, both financial services and technology. But not just, you know, from a gender standpoint, we have over 30% of our staff that identifies as LGBT. We have over 30 nationalities represented. That's in Brazil. You know, we have people from, I mean, you name it, Australia, Canada, the Netherlands, China, you name it, Chile, Mexico. So, and we continue to reinforce that because and it all happened in a very organic way, in the sense that we never set out to say, oh, we're going to have this amazing program to attract women or to attract, you know, different sexual orientations. We just created an environment in which people could finally be themselves and stop wasting energy pretending to be someone else, you know? And that has led to a very organic and natural function that people would just refer us as employees to their friends and family. And it had led us to countless, you know, recognition. So one of the things that we're extremely proud is of our employer brand. We've been named by LinkedIn some of the top startup to work for 2 years in a row. We've been among the top list of employees in Brazil for years now. And now we're starting to like put some programs, you know, specifically on areas that we're still behind. So when you look specifically at software engineering, for instance, of course we have a lower representation rate, but we're still very much above Silicon Valley companies. So we currently have 17% of female software engineers at Nubank. Well, you know, the average in California, where Google and Facebook and a lot of those companies are spending billions of dollars to change that, they only have 12, you know? So recently we had like this structured initiative to hire more female software engineers, and we've attracted almost 3,000 women across Brazil, you know, to apply for jobs at Nubank. So I think it's a combination of just having the right mindset, but also making sure that you have a truly inclusive culture, because it's not enough to get people into the door if by the time they get in, they realize that it's just like every other company, that they have to pretend to be something else, or that they're not going to have access to the same opportunities that they would have wanted. So I think it's a combination of those 2 things, you know, make sure that, of course, you're attractive, but there's a lot of work, you know, internally for you to make sure that people are truly included.
Thank you, and congratulations for leading the way in this dimension. Fernando, one key actor that is not represented here today are the regulators, you know? And regulators would vary across countries, maybe in their views on the openness that they would have to really facilitate the emergence of new business models, or to block it. And so for an institution like yours, what has been the interactions and the perception, how the regulators are facilitating or somehow limiting this progress? And if you would need to have an ask to them, what that would be? Yeah.
It's a great question, a complex one. From our perspective, and specifically talking about payments, I think what we are seeing more and more across different geographies and different complexities is the regulators really driving forward with this concept of digitizing the economy. And I think there is 2 drivers to that. One is the need to continue to drive for more financial inclusion and making sure that people that are unbanked, which traditionally is the lower income populations in the emerging markets, have access to financial services and therefore the ability to develop. But also, I think they need to tax the economy, to tax the gray or black economy that, again, in the emerging markets continue to be a significant portion of our GDPs. So we have seen the regulators really driving the agenda of transformation and digitization from a financial services perspective, and particularly in terms of payments, to make, again, the life of their populations easier. At the same time, they continue to have in mind the prioritization of protecting the customer, and certainly making sure that financial institutions are not stepping off the boundaries of what's good and bad for those consumers. So as a global financial institution such as Bank of America, we need to make sure that at all times we are in compliance with what the regulators in a given geography and our American regulators are asking from us. And that is something that demands a lot of financial effort, demands a lot of investments in artificial intelligence, machine learning, pattern recognition, which obviously are helping us to be more efficient in terms of dealing with that, without losing sight that from our perspective, that is a way to continue to protect our clients at the same time as protecting our franchise. So I think there is very constructive and positive engagement towards facilitating, again, the modernization of the systems. One interesting point is this is the first time in I don't know how many years that the American regulator, the Federal Reserve, has committed to real-time payments in the US. While we have had real-time payments in Mexico, developing in Brazil, in the UK. So again, back to the point that modernization is coming from outside of the US. Well, it's finally, hopefully, reaching also the US. And that commitment, I think, it's going to help us all. I don't think that the regulatory burden is getting any easier because, again, we continue to live in a globalized environment that has become even more complex with everything that is happening from a geopolitical perspective. But I do see that there's more and more vision and commitment from regulators around the world to modernize infrastructure in terms of financial services and payments specifically.
Good. And in your case, Osvaldo, being more somehow, if you could, more specific, in some good cases and maybe less good cases on how the current regulation would allow you to go quicker or slower, even in the new area that you had entered on this investment side, and really, do you need a banking franchise to do that, and to do that or not? And I believe it's different by countries, how to manage that convergence in the region.
Yeah, I agree with you. I think there are two sides to regulation. I think on the one hand, of course, if you are a regulator, you want to make sure there are no systemic risks in any country. On the other hand, I think governments and regulators should have this broad objective in mind that we still have 50% of the population in Latin America without enough access to financial services. So the more regulation you put, it is more likely that there will be less innovation, less competition, and we will not solve this second problem. So I think that we try to convey this message to regulators all over the region for them to keep these two objectives in balance. Going to specifics, I think that in some countries we have seen regulation which, of course, in order to try to make it as less risky as possible, they are not really thought in terms of how to make a digital onboarding safe, but also efficient. And so there are still many, I would say, old economy requirements where, for example, for investments above a certain amount of money, they require an interview with the customer, with the consumer. And that is really cumbersome and would really slow down how fast you can grow digital onboarding. That is the case, for example, in Mexico today. In Argentina and Brazil, as going to your last question, there are very different requirements in terms of what you can do when you have money for third parties. In Argentina, you need to, if you want to offer an investment product, you do need to partner with a bank. We are not a bank, so we do work with one, which is Banco Industrial. And so whenever a consumer wants to invest in our money market, what we actually do is we transfer those funds with the bank. But we have built all of the technology and a layer and consumer-facing layer so that for the consumer it's really transparent. They know their assets are moving from Mercado Libre to the bank, but they still have access to those assets whenever they're using any of our products. In the case of Brazil, we are regulated as a institución de pagamentos, as a payment institution, and therefore, if we have those assets of the client invested in very safe assets, we are able to pass the results and the dividends from those directly to consumers without having to work with a bank. So we do that by ourselves, and this is a case where regulation has enabled us to, for example, to roll out a product significantly faster, because we can set it on by default to all of our users, and that is what we have done. So all of a sudden, they started gaining interest in their account. In the case of Argentina, since we work with third party, we do need a specific validation from each of the consumers that they want this to be set on.
Yeah.
Can I add to that? Because regulation is such a dear a theme, so dear to my heart. Listen, I couldn't reinforce enough Osvaldo's words on the need for regulators. I mean, they've been great. They're embracing technology. They are open-minded, pro-competition. They understand the impact that we can have. But there's definitely a lot that we can do, especially, so I know there are IDB people here somewhere, and I think there's a lot that can be done, especially in a coordinated fashion, across the region to get to some standards.
Absolutely.
Take digital onboarding, for instance. It's insane. Like you mentioned the Mexico example, like we're facing the same thing. Like think about us conducting personal interviews with consumers that just want to finally, be served by a system that has failed them for decades. Like, what the hell? Like, why wouldn't we? Especially after we've shown over and over in Brazil, after onboarding successfully over 15 million people, and including another, maybe 3 million of them that had never had a credit card before, successfully into the system with extremely low fraud rates. Like, why are we reinventing the wheel in every single country? Why are we having to have these discussions, extremely, long, extenuous discussions with every single regulator when we could have a standard for the region and just, move on and then leverage the technology that's being developed in different countries to extend the potential financial inclusion across the region? Like, it's something that, it would be an extremely powerful agenda for IDB, for instance, to take on and to help us coordinate with the local regulators. It's so important. So anyway, I just wanted to make that point.
Fully agree.
You
and
can see that
understand.
I'm passionate
That's a good
about
point.
So we will start wrapping up, and I guess one a quick exercise that I would propose to each of you would be in a very concise way. If you would need to now use one minute to make ask to somebody of all the stakeholders that we mentioned, so competitors, platforms, regulators, consumers, society at large, make one ask, what that would be coming from your organization, and one commitment, one promise. So the strength of the brand, it's their ability to deliver on the promise that they made. And therefore you all are strong brands and you want to keep that strength. So if you would imagine an ask and a promise that you collectively will commit here, it will be great. So maybe Kiki, you want to start?
So an ask, and I'm going to choose regulators since we were just talking about that. So an ask for the regulators, I think it's I was explaining before how we are operating beyond a four-party model. We're operating in a model that is actually inclusive of governments and merchants and retailers and consumers. And as we move forward, we need to make sure that we're doing rigorous assessments across the board and for the benefit of all the stakeholders. I think that there's a clear need for us to ensure that everybody in the ecosystem benefits from participating in this financial ecosystem. We have built a brand on trust around a set of principles and standards on choice and consumer openness and being able to provide alternatives for users. And so as we move forward, the commitment from Mastercard is really to continue promoting exactly that. It's promoting openness, promoting interoperability, promoting consumer choice.
Thank you. Fernando?
From an ask perspective, I would certainly add my name to the need for a standard from a regulatory standpoint. I think all of the players in the financial industry will benefit significantly, and more importantly, our collective clients would benefit significantly from that. I would also say from a fintech and financial institution perspective, continue to drive for more collaboration. Had the opportunity to had a very interesting dinner yesterday where in another industry we saw that collaboration does not exist. I think between fintechs and financial institutions we have a great opportunity to do more. And yes, we can compete in certain areas, and that is absolutely fine. That will make us all better. But collaboration from that perspective, I think, will be fantastic for our clients at the end of the day. In terms of a promise, from a Bank of America standpoint, I think we are as strong as the trust that our clients put in us everywhere where we do business with them, and certainly the promise is to continue to earn that trust. We truly believe that not every dollar of profit is created equal, and therefore we need to continue to do the right thing, and also to continue to drive, which is something that is also very dear to Bank of America, but I think is very relevant to all of us, is the agenda on ESG. We have made a commitment of $300 billion of investments in ESG between now and 2030, and I think that, again, ESG is a big theme for all of us, because we only have one planet and we need to protect it, and we need to make sure that from a social corporate responsibility and governance, we are as weak as the weakest link. So that commitment has to be there. Certainly from us is there, but it is the ecosystem that will drive impact from that perspective.
Thank you. Osvaldo.
Let me start with a promise and I'll then ask for the ask. In terms of promises, we will continue providing tools to include as many people as possible in the region and bring them access to financial services. As we saw, there's huge opportunity here, and we'll continue deepening in more verticals in terms of financial services and providing the broadest access at very low cost so that more people can benefit from it. In terms of ask, I think this is a trend that has already started, and it's building on what they both mentioned about openness and also building on regulation. I think that's what's going on in Europe with Payment Service Directive 2 is huge. And we know different central banks are looking at similar regulation in Latin America. Let me summarize it in 1 minute for people to understand what that is. Basically, PSD2, what allows is, they say, you know, if you're a bank or if you have a balance, that information and that money is not yours, it belongs to the consumer or the client, and so the client has the right to let a third party initiate a payment on his or her behalf, and also he has the right to share that information with a third party for that third party to provide a credit. So I think that would be awesome, because that would really enable all of us to share more information, and the consumers will be the ones who benefit.
Thank you. Cristina?
Yeah, I won't go back to the onboarding piece, but adding on this, I think we can really ask for more than, for regulators to continue to be moving as fast as they can towards, simplifying and allowing technology to continue to enhance people's lives. I think open banking and everything that is coming is a huge opportunity for the region to leapfrog so many problems, and to also make huge step changes as far as inclusion and access go. So, I mean, I would just, if we can get to an open banking regulatory mark across the region that makes sense, that, brings consumers empowerment towards their own data and their own credit history, I think it's a great thing. And as far as promise goes, we are a brand company, and we are so proud of how we've built such a love brand based on such authentic values. And our core purpose as a company is fight complexity to empower people. So I guess that's our big promise, is to continue this fight, because it is a fight. Like, it's, waking up every morning and chasing a lot of hard problems, but against this big enemy, which is complexity. It's everywhere in our lives. And to the extent that we can use technology, use design, use better UX, better customer experience to, take that off, like take that smoke curtain off of people's faces and give them back control of their lives, that's what we're here for. So
thank you. I think in summary, we are all, let's say, observing with a lot of attention all these changes and disruptions. At the same time, there are so many forecasts about some of the challenges, some of the fears, the implications on job, labor. But at the same time, if we keep that perspective, probably the one that you are conveying to, based on what you are doing, of abundance and opportunities, and even without having the solutions to many of the problems that we're facing today, the solution would come. So technology will help, innovation would help. I think we should be looking in a very positive manner. And thank you, each of you and the companies that you represent, for the willingness to reshape the future in a better world. So thank you so much. Yeah.
Thank you.
Thank you.
Muy bien.